The downtrend continues for Bitcoin, now down $37,000 from the all-time high, roughly 44 days, which is going to be a really important thing we watch in today's video, as we've never seen this happen in bull markets. On top of that, we've also hit the 30% retracement, 30% correction, which is exactly what has happened on each of the occasions when we saw a 3-day down signal from a significant top, in these cases, the all-time highs. And essentially that signal is your 3 red bars. Now, I often come back to this because it takes a long time for these corrections to play out. And as they have been playing out, well, it continues to get worse and worse for the market. So it's really important that we focus on those, or at least when they happen, so that we can be prepared for the downside, as we were in this particular case here with those 3 big bars down. So we're going to focus a lot on days. The day counts here. We're going to look at prices in terms of where this could bounce to, and also assess how much further or deeper this is going into a bear market, or if there is a chance of a bull market. So subscribe to the channel. You've got daily content here with Bitcoin, the stock markets, and the real estate cycle. And of course, I throw in precious metals. We're looking at where the liquidity is running from and to. So essentially, where is that money going, and where do you want to be investing in? That's the thing we've been doing forever here. So stick around and like the video if you've been finding some value from the content. Starting with the first signal that we had from the top, 3 red days, lower highs, lower lows is the key here. Not that they have to be red in nature in terms of a closing price, but you want to see lower highs, lower lows. That tells you the bears are in control. We've been talking about it forever, and we saw it on each of these occasions. I posted the videos on the channel. This isn't in hindsight, it's in real time. Of course, that's the only way we're going to make any sort of money here, is doing it in real time, not in hindsight. And of course, when you're doing it in real time, there is obviously the chance of getting things wrong. So far, the markets have been on our side, and we just got to move with them. Things change, we've got to keep moving with them, keep updating. Okay, so here we are, 3 days, 30% correction has been met. We got the 30% last time, 31.3, and then the time before when we had the signal, 1, 2, 3, 33% to the downside. Each of those occasions took many months to recover to new all-time highs in a significant way, because you could argue here, you got the January pop up, it was $1,000, very, very weak close, which is a sign in itself that things aren't looking too good. You got the bar there, and the close is way down here. And of course, things fell from that point. So we're not interested in just touching a new all-time high. We're interested in pushing through that level. And in each of those occasions, that's what the market has done. So that's the first thing with the 3 days. They've all followed all-time highs, even in the last cycle. You've got April top. There was another signal. We can zoom right in. Boom, 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 boom. There it is. And again, in October, like I said, there was a minor push higher, and then it collapsed from that point. The market is telling you that there is just not enough buying pressure coming through. It signals a major change in trend. To me, these are major changes in trend. You can call them whatever you like, but 30% correction, 140 days, nearly 5 months to the downside, and 3 to 5 months to the downside here. They're major changes in trend to me. Confirmation confirms a long correction or advance. Now, these signals can work from lows, but we just haven't seen them from Bitcoin lows to give us that nice, big, strong buying power. That's the beauty with this particular signal, is you can use it long or short. Invalidation means a quick advance to the upside. We've seen it before in prior cycles where you get the 3-day signal and then a quick advance past that high. Generally within a week or so, you see the correction and then a bounce back like a V-shaped recovery. If that doesn't happen, you're in shit. And that's what we saw in particular here in April, which I'm going to get to in regards to the downtrend, the thing we haven't not seen in bull markets. So, okay, we'll leave that for a moment there. Coincides with extreme greed or greed. That's typically at all of these tops, and in the price cycle, and in the price cycle to that, and in the 2019 pump to 14K. Corrections no less than 30%. At least that's what we've seen in history so far, and always tests major support. In many cases, a 50% level or a major previous resistance, so coming down as support. Now, the price's targets, in this case, say 30%, are subject to change over time. If there is more and more money coming into the space, then you may see lesser drawdowns, of course. So that in itself is a little bit of a difficult case there for Bitcoin, the 30% there, but we do have some targets to the upside. If this is the low here with 8 days down now, 8 days down, lower highs, lower lows, and yes, there is a green and a green here. I have to explain it every time because there's usually a couple of comments about it. That did not break a previous top, therefore the buying pressure was still low, therefore it is still within the downtrend in the swing. So we have not broken any of the swing tops here, or the daily tops. There is a top, 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 top. All the tops have not been broken. The buyers are just not doing it yet. So we have the rally, we have a target to the upside should we get a rally now with these 8 days down, and that is roughly around 107. The market has to get above 107, and I've said many times before 108, because you see it 107, 400, ideally close above 108, and that is another strong resistance level that we've seen now coming up to 12 months. So any of these sort of rallies now have really got to get above that level, and that could then hopefully flip things from the bearish state that it's in, even though the macro is still bullish because we haven't broken the 70%. And that could then consolidate to push higher, right? To clarify, breakdowns of 50% very, very weak. And that essentially gives you that line in the sand, the black and whiteness that most people look for in their trading or investing. But of course, we want to try and act as close as possible to the high before we get to those levels. So for the extra confirmation, basically for the insurance, for the market saying this is it, you've got to give back more of those gains. The same thing happens to the flip side. If you're trying to stay in with the market, well, you have to just allow it to keep running even on these declines. So there's always a trade-off in trading. How close can you get to the top and remain in the trade, in the trend, unless it starts to break higher again, okay? So it could dip and you go, shit, that was a top, but then it rips higher. So there's always a trade-off. We're looking for closes above 108. So Gann tells us that time is more important than price. When time is up, price will reverse. Hope that makes sense. When time is up, price will reverse. And he's talking about cycles here. It's the study he did for over 50 years. Gann was an absolute legend and a genius, born in the late 1800s, died 1955, and has given us a lot of trading rules to follow, as best we can, and keep implementing them day by day to see if we can continue to improve on them. The point with Gann is that he found that time was far more important than understanding price. And I think we can appreciate that now in the current cycle, yet again, like 2021, where time was up, there was 1,060 days, and then the market collapsed. This time, we saw another 1,050 days, and the market is now down 30%. Of course, we still need the major confirmation here of a breakdown of 70K, but at the moment, it's done a pretty decent job of being up here at that time, just like it did in 2017, another 1,060 odd days, and so on. So it's important at those times because generally what happens at the tops is every man and his dog, every key opinion leader, influencer, previous hedge fund manager turned YouTuber, those sort of things are talking about bigger moves or liquidity, or these sort of things that are coming into the market, the herd liquidity mentality. At least this is what I've seen over 2025. And although it can be right for a period of time, it's not going to be right all of the time. And I think we've seen this playbook before through 2020 and 2021. And I think everyone assumed that it was going to play out yet again. I've added a couple to this since yesterday, thanks to your help on X as well, because of just going through some of the hopium that has been pushed for weeks. And I'm still hearing it now. I see videos and posts and people talking about it, thinking that, look, it's just a matter of time until the money printers come. And I think that, look, that could be right. But in the meantime, if you're only focused on Bitcoin, then it hasn't been right, and it's probably not a great thing to rely on the liquidity, the herd liquidity mentality. And that has basically been your stimulus checks, the QT ending next month, the QE starting, and the herd assumes it's going to start straight away. At least that's the interpretation that we can hear out there. Global liquidity will continue, which we've seen it basically stagnate now. Fed to cut rates, at least that's what they're hoping for, and we obviously haven't seen that, and the probabilities keep shifting back towards the fact that they're possibly not going to cut them. Treasury liquidity injections, money printers to turn on again, and of course the Bitcoin strategic reserve, which is all supposed to be positive for crypto, along with the ETFs that they would be launching for several other altcoins. So with that in mind, and we haven't seen the market rally higher on the back of that, which we could call a news failure, what are we seeing next for this particular signal? And I'm looking at how many days down in a row have for the market, and in this case we've got 8. This is very, very uncommon, if ever, and I'll show you this one back here, happens in a bull market. But I've got some good news as well. We won't just leave it all on the negative here. We want some positivity as well, as market loves. The 8 days down, as you can see for this bull market, has not happened after a break of the all-time high. So we can see at the low into the March banking crisis of 2023, there were 9 days down. And so just to clarify the days, these are lower highs, lower lows, or higher highs and higher lows. The bar itself has to break one of those extremes to break the count. So if we're in a downtrend, then you're going to expect at least lower highs, and in some cases you will get the higher lows, but they're on inside days. You didn't get a break at the top or the bottom, so they're still counting because they haven't broken the lows. Then you get a rollover effect again, and a break of the low, a break of the low, a break of the low, a break of the low. That's how you get this count here to 9 that we're using with your GAN Swing Pro. If you want to turn that on and you have it yourself, go to Inputs, click on Bar Count, and then you just want to adjust the amount of days that you see. So you could drop this to 2 or 0 and you'll get turning points everywhere. But we want to see the extremes here, which show us whether the bulls or the bears are in control. And I'm putting a number here of, well, I'm changing it to 8 so that we can remove a lot of the other noise there for this particular signal. So once we get a break above all-time highs, it's very unlikely that we're going to see more than 7 days down with and continue up within the macro. In this case, we got 8 days down. Lower highs, lower lows, of course. The other times we've seen it and the market did hit a new all-time high was 2021. But as we pointed out with the 3-day rule as well, which I covered extensively at the beginning of this video, the move higher was pretty redundant. It was pretty weak. We can chuck on a couple more lines. You can see through the top there, it didn't even close 3 days above the previous top here at 65K. You had 1 daily close and then a reversal, 2 daily closes and then a reversal, and then of course things came crashing down from that point. So that ended up being a lower high. So that's another important part to watch now. Since we got the 8 bars down, the 8 days down, what are we going to look at with this rally? If it comes, generally there's going to be a rally, of course, but when this rally eventually occurs, where could we look for any sort of relief into that bounce? That's why I've got the green line to have a look at in a sec. Also, the prior cycle, just as a looking at history, through all of the 2017 bull market top, there were no 8-day moves to the downside once it broke the all-time high. So it broke through it. You did not see any of these 8 days to the downside. There was one here in the accumulation, but you'd expect that. Not many people are really watching or interested in the market when it's at such low prices and hovering around those lows for months on end. This was January to August, September, October, and finally November. So essentially 10 months, almost a year at very low prices. You can expect it there. The other times we've seen very, very long moves to the downside in a row on the day count is in a bear market. There are 10 days there. There are 13 here. You can see them just a little bit closer. All the way down. Yep, we've talked about green already. Lower highs, lower lows. That's the point. And so on and so forth. Okay, we get the idea. They don't happen in bull markets. And if they do, which is one case so far at this top, it was really a very, very weak rally. And I say weak rally because it didn't pass that all-time high by very much. Kind of like what we've seen here. You got the top in July at 123, then 124, then 126. People get excited, but a lot of people buy the tops and there's really not that much gain left in it from those highs. So that, to me, continues to weigh on the bearish narrative. And just to keep it as clear as possible, this is the final nail in the coffin, in my opinion. Breakdown of 70, 71K would really be game over. Don't even worry about coming back for anything this cycle. But the signs and the signals that we're seeing here continue to lead to an extended correction, a drawn out period here. If we're going to see some sort of rally, then we've got the 50%. So we're looking at least moving above that would turn things into bullish. Otherwise, we're probably looking at some sort of rally into it and a failure. There's a couple of lows here at 98 and 100K where it all broke down from. So it's got to get past that first. Then your 107, 108. And then your green line. So the 200-day moving average. And that over time is going to also continue to roll over here. Of course, it's an average. So if you've got lower prices, then the average is going to drop. At the moment, it's sitting at around 110. And yeah, over the coming days, probably going to hit 109, 108. That's not really it's not really too important right here because there is still got to be proven that we're going to see a bounce from this low. So 100 first level, 98 to 100, then 108, then your 200-day moving average, because we've seen it in prior cycles where it's collapsed, Bitcoin price has collapsed, then it's taken months to climb back above, test it, and then it's collapsed from that point. And you can see in the price cycle as well, there was 8 days down, the market was collapsing, and then we also had another 8-day down move here. That was where the count begins from, and then you've got an inside, down, 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 down. So it's really putting the pressure on the selling here. So with that in mind, let's see if we've got any signs of a reversal, any signs of a bounce here for Bitcoin to get into a relief rally. We're going to be watching 98K. We're going to be watching roughly around 100K. If those two break, then we look towards the 50%, the current 50%. Nice round number. We'll call it 108, and then your green line at 110. So there's a lot of numbers above, meaning there is a lot of work for Bitcoin to do now to get back into that bullish position. Otherwise, like I've been talking about, I think we rally and then start to head lower again, which gives us some time frame to look at. So XRP and Ethereum, why am I using these two for the time frames? Well, in the past, we've seen XRP put in tops before the market. Ethereum this cycle has put in a top before Bitcoin. Generally, you'll see it a few days after, maybe a couple of weeks after. Ethereum's in the purple, XRP is in the white. And last 2017, Ethereum put in a top in January, Bitcoin put a top in December. So it was after the fact. You had an altcoin season, things were going crazy. XRP roughly around that December point. But Ethereum is a little bit more closely aligned with the altcoins. And then 2021, it was only a few days after. So it put a top in November, a few days after Bitcoin. And we know from looking back at history now, the altcoin season, sure, it took off for that October-November period, but it was much more pronounced in that move from January, February, March, April, May-ish, and then things started to roll over. You can see the May move here for Ethereum was pretty close to that April point, and then everything started to roll over in May and June. So the altcoin season was earlier, the second pump was weaker, and then we get to this cycle, and August was Ethereum's top, and it's rolled over since then. We know Bitcoin put in an all-time high in July, August, and October. By October, Ethereum was already down. It was a couple of months off that high, and here we find ourselves now down at around 3K, just touched under 3K recently. But I'm looking at this with timeframes, and the timeframes we've seen with XRP is that it likes to do roughly 12 to 13 months in a single direction. And if we turn this off, you can see a little more clearly that the numbers at the bottom are for XRP, 26 months top to bottom, 13 months up, 14 down, 13 up, 12 down, 12 up. And maybe we find ourselves at 12 months down again, 12 to 13 months down. Ethereum's timeframes are at the top. And I'm looking at timeframes. Gann has said time is more important than price. When time is up, price will reverse. Reverse doesn't always just mean from a top down. It can also mean from a low to a high. So from a low to a high here, the next one lines up for Ethereum and for XRP roughly around Q3 of 2026. So correction low forecast, of course, it's got to be confirmed. It's just a forecast. I'm not betting my life savings on this, but I'm interested in Q3, depending on how everything pans out over the coming couple of months, actually. We'll see what happens through the end of November and then December, and whether we do get any sort of sustained rally for Bitcoin that passes back through some of these major resistance levels, so it needs to get above those, or does it get rejected and then become weak again? So that is the hopium I've got. Closes above 108K for Bitcoin. Otherwise, we go on a rally. This is the chart here. We go on a weak rally, start to fail, come back down, and they'll be watching for some timeframes around Q3, because maybe by that stage, the masses and the herd will have gotten sick of this liquidity because it's not working in their favor for their Bitcoin or their altcoin trades. So there's a few things to keep in mind here, but that's the markets. If it was that easy, everyone would be absolute millionaires. But it's not difficult stuff. It's just a lot of things to keep in mind. And the best way to do it, I think, is obviously keeping a journal, keeping track of what's going on, subscribe to the channel. There's a little cheeky plug. Of course, like the content so it shows up in your feed. That's how you can help it. And we'll continue to watch where these markets pan out over the coming days to see whether Bitcoin can get above the 108, because it has to reverse very, very quickly. We've seen that in the past. If it doesn't happen very quickly, it can turn into a lower high, and then things get a little bit more negative from that point. USDT dominance is something we can talk about in the next videos, but that has also been on an upwards trajectory after putting in higher lows, Bitcoin putting in higher highs. That happened last cycle. The white line is Bitcoin. The bar chart in the background is the USDT dominance, higher lows. And so that basically meant Bitcoin rolling over and dominance going up. At the moment, that has meant the same thing. Bitcoin rolling over, potentially dominance also going to skyrocket. It needs to get back through our 666 number. So I think this is going to be that point where we may see a minor bounce for BTC. And then if the bull market's going to continue, we've got to see a major bounce here, basically a major rejection for USDT dominance, and then more of that liquidity flowing back into Bitcoin. You need to see this chart get absolutely slaughtered. And so finally, in the short term, for any sort of upside here, the S&P 500 has also found some legs and pushed a little higher, following the 5-year cycle that I've been showing you guys for months on end now, pretty well tracking it to a T. Look at the tops to the 5-year lows, 5-year low, a little bit of a consolidation, another rally up, dumps into the low, a rally higher, dumps into the low, another rally higher, a day or so off. This is a 5-year cycle. Like, why is it working almost to the day? Another top here. You can see that's the top, starts to roll, rolls, coming down. There it is, lows, and then we've just got another day up here. So this could be helping Bitcoin on its way to testing those higher prices, 98 to 100. Then we'll look to the 108s. For now, keep your eyes on 98 to 100, whether we get a significant rally out of this low. Oh, and should we get a strong 3 bars up, like in this chart here, then we could start to get a little bit more excited that the rally could be sustained for longer than, I guess, what it is doing at the moment, where it's basically doing nothing with any of these minor rallies. There's very, very minor rally, very, very minor rally, very, very minor rally there too. So let's, or at least the bulls, hope for a nice big 3-day push to the upside. Even if it does correct again, the 3-day push to the upside could be a nice strong signal there. So 7 days down in a 7-day downswing in a bull market typically marks a low, whereas an 8-day downswing in a bull market doesn't happen. That's what we could see from our counts here. Let's turn the 7 days back on. 8 days, yes. 7 days, there's a low. 7 days coming up to a low. 7 days, there was a low, a minor low in here, and then a rally, and it all continued to carry on from that point. But an 8-day after hitting a couple of new all-time highs, very, very uncommon. And the last time we saw that was 2021, lower high formed, and then the market crashed a total of 50% from that point. So that's the base case at the moment. Looking for a rally. I think it'll be a failed rally. It needs to get through the 200-day above this level and the 50%. Seems unlikely considering where it is and the build-up of all the other bearish signals that we've been tracking. But we can still hold hope because the 50% hasn't broken down. Of course, just to make it super clear, my base case is I think we're going to get a rally and it's going to be a failed rally, and then things will sort of die out again. Maybe there's going to be another attempt higher because there's been so much fear in the market. It's just been going on day after day after day. We haven't seen greed for a very long time. I think over a month. I covered that in the video yesterday. And that's another sign that things probably have a little further to go. But because of that extra fear, maybe we can get this extra drive higher just to wash in a few more buyers late, like it's done in the prior cycle here and here and here. They're your lower swing tops. Suck in a few more buyers there, thinking that it's all going to be good again because they'll come back to all the liquidity stuff. That'll hit the headlines again and then roll over. I don't think that happens over a course of days. I think that's going to be several weeks to form that particular pattern there. But of course, I'll keep updating you here on the channel. We've got a sale on TIA, the Investor Accelerator Pro. That's for Black Friday coming up real soon. Link in the video description for that. Remember to subscribe, like the content if you find value, and I'll see you guys back here in the next video. Cheers.